Welcome to the ETF Show, taped right here at the New York Stock Exchange. I'm your host, Kristen Myers, ETF Editor-in-Chief for Asset TV. Now, Bitcoin prices have really been tanking so far this year. They've dropped over 20% to where they currently sit at below $70,000. Now, investors have really been fleeing the crypto asset amid all of this volatility. In the past 3 months alone, listen to this, it has been reported that Bitcoin ETFs have lost $6 billion in flows. To chat more, we're joined now by Zach Pandl, Head of Research for Grayscale Investments. Zach, thank you so much for joining us.
Thank you, Kristen. Great to be here.
So, you're joining us at a pretty interesting time right now. We've been seeing this roller coaster ride in Bitcoin and in crypto really at large. What has really been driving a lot of this volatility that we've been seeing in the crypto markets?
Well, I think crypto is always interesting and always a bit of a roller coaster. I think that's true. Look, it has been a pretty meaningful drawdown, about 50% from the highs, and one of the larger ones that we've seen in recent years. So that is an important moment to kind of clarify for investors what's been going on. And I think the number one thing is that this has not just been about crypto. You've seen a broad de-risking in frontier technology related assets. Some of the AI names, even quantum computing, defense tech, frontier technology. So Bitcoin has really been trading more like a growth asset, a growth stock, and less like gold. The marginal investor in the last few years has been interested in the growth of blockchain technology, and as we've seen de-risking in those types of assets, Bitcoin has been moving along with it. Now, we in crypto have some challenges, regulatory things. We'll talk about all this, but I think that's the number one thing, is crypto behaving like a growth stock and pulling back along with de-risking in growth portfolios.
I'm really glad you mentioned this sort of movement more as a tech asset instead of like digital gold, which everyone calls Bitcoin. I'm going to ask you about that in just a moment, but I want to ask you, because I think a lot of investors are worrying this. The pullbacks that we're seeing, is this an entry point right now, or should they be thinking about this in a different kind of way?
Well, these are probably good entry points for the longer term. Now, again, it's a volatile asset class, and investors should recognize that these are risky investments. But for investors that have a longer term horizon, these types of drawdowns in the past have proven to be excellent entry points. And Bitcoin, the rest of the crypto asset class, has been remarkably resilient through these things over boom-bust cycles, resilient against attackers, resilient against competition. I think has demonstrated its value over the long run. Probably a good entry point for investors that haven't participated. And what I would emphasize is that most traditional investors have not participated. Although Bitcoin is a household name at this point, we talk to many different types of institutional investors, and they're still considering whether they want to allocate to the crypto asset class. This creates more of an opportunity than a headache for them today.
So I want to ask you about that point that you were mentioning about, Bitcoin and crypto ETFs really kind of acting more as growth assets, risk assets, instead of this store of value. When do you see really Bitcoin starting to behave more like, consistently anyway, more like digital gold instead of these growth assets like you just mentioned?
Yeah, Bitcoin is still growing up. Gold has been considered money for thousands of years. It was the basis of our monetary system in the United States and other major countries until the early 1970s. So gold has a special place in capital markets, the second largest asset held by central banks after the dollar and before the euro, which is remarkable. So Bitcoin is still hasn't achieved quite that same status. When it achieves that status, when it's ubiquitous throughout the financial system and considered a long-term store of value, then it probably will behave more like gold. And that means lower volatility, lower correlation with equities, but also lower expected returns. Investing in Bitcoin today is getting both of these things, a macro asset and long-term store of value, and a growth asset. And to me, that makes it a very exciting asset to put into a portfolio. But investors need to recognize, of course, it is not exactly like gold today. Certainly is day-to-day trading behavior more like a growth stock lately.
Are there, looking out, at the remainder of 2026, we are still very much at the start. What are you seeing as some of the biggest tailwinds and even headwinds that are really facing crypto this year?
Yeah, the kind of number one tailwinds are, one, regulatory clarity, driving demand for stable coins, tokenized assets, decentralized finance. We see news about this every single day, and this is a mega trend that is well beyond any one piece of legislation, any one government. It's international. It's been going on for many years. So regulatory clarity for blockchain technology, that's sort of the single most important. And the second is investors looking for alternative assets in general. Equities, bonds, we're not sure whether 60-40 portfolios are going to cut it for the longer term. And investors are very focused on alternatives. And that's things like private equity, hedge funds, private credit, infrastructure, all of these types of things. And the crypto asset class fits alongside those types of investments in a portfolio. So demand for alternatives in general is also driving interest in crypto. So regulatory clarity, demand for alternative investments, and portfolio diversification, these are really the key tailwinds for our asset class.
But what about some of the headwinds really facing a lot of investors, especially as they consider thinking of really as volatility almost as the theme, almost, it seems a lot of people are mentioning for this year?
Well, I think one big question is the outlook for the Federal Reserve, and this was probably a key catalyst around the recent drawdown. Really, this pullback in growth stocks, pullback in Bitcoin that got started at the start of February, really the trigger was President Trump naming Kevin Warsh as his likely candidate for the next Fed chair. I was a professional Fed watcher during that whole time that Kevin Warsh was on the Board of Governors, so I'm very familiar with his views. And what I would say is it's not surprising to see the market's reaction. He was a hawk during that period compared to other Fed officials through the financial crisis, through quantitative easing. The market has a lot of memory about those things and reacting negatively. Let's see how it goes. Let's see how his nomination hearings go, how he behaves as a Fed chair. I think maybe it'll be more balanced than the market thinks, but that's potentially a headwind at the moment, that the Federal Reserve not quite as dovish as what we had thought. I think that is one of the things that's been weighing both on Bitcoin and on frontier tech stocks.
So as you've been mentioning tech, right? One of the things that we've seen investors talk a lot about is really reconsidering their portfolio allocations, especially to tech, as we've seen this tech underperformance. Is that also translating to some reconsiderations in terms of their crypto allocations as well in their portfolios?
Look, I do think that the broad kind of macro investing picture is changing from where we were in years past. We have a lot of investment going on. The government running deficits and investing in the economy, the private sector investing in AI data centers, and this is happening all over the world. And the things that are benefiting are those real economy parts of the market, industrials, price of copper, emerging market stocks and bonds. These are the things that are benefiting from that type of world. You know, crypto is a unique asset. Again, as we've been talking about, it's not exactly a software stock. It's not exactly a physical commodity. It's a digital commodity that runs on a network of computers and uses open source software. It's its own special thing. We think it should be considered a unique diversifier in portfolios, and I don't think that use case in an investment sense for the crypto asset class changes at all. But it is correct that investors are reconsidering their portfolios, and I think shifting more away from classic kind of software bets more to real economy investments, and that is driven by what governments are doing, what the private sector is doing.
So have you seen investor behavior really shift at all since the launch of, these spot crypto assets? And when it comes to their portfolios, you were mentioning, alternatives, how a lot of investors are turning towards alts. Are you seeing investors using crypto ETFs more strategically inside of their portfolios now? 100%.
Yes, that has absolutely changed. Now, this latest pullback notwithstanding, I think the ETF buyer has actually been very steady. And you mentioned some ETF outflow numbers. ETF outflows have been much smaller than I would have guessed given a 50% drawdown in the market. So it hasn't really been the ETF buyer that has been unloading crypto recently. ETF buyers have been, as we say in crypto markets, diamond hands, holding for the long haul. And I think that will continue. I think you'll see continued inflows into ETFs through wealth platforms, through institutional investor portfolios. And I think that they will be sticky buyers. And the more that crypto moves into ETF funds, probably the lower volatility on average over time. Still very volatile today, of course, but I think on average over time, ETFs would probably be something that reduces volatility in the marketplace.
So speaking of essentially some of this investor behavior, another thing, in addition to this portfolio allocation question, has also been the question of diversification. How should investors think about diversifying within the digital asset space? And how would you say that ETFs can essentially help or maybe even hinder them do that?
Yeah. The diversification applies to crypto in the same way to every other asset class. You don't just buy one stock, you buy a basket of stocks. You probably don't want to buy just one crypto asset. A basket of crypto assets probably makes more sense. The key thing to understand, though, is it's a very top-heavy asset class and probably always will be. You don't need 500 like you have with the S&P 500. Maybe 5 is good enough to give you a lot of coverage of the asset class. The top 5 assets account for about 90% of investable market cap. So I think about that number, 4, 5, 6, something like that, crypto assets to build a small diversified crypto portfolio. That's typically what we recommend for our investors.
Curious to know how you find the ETF wrapper really impacting the crypto space. Do you think it's speeding up the maturity of the asset? Is it just making volatility more accessible to more investors? All of the above, something else?
It's been a very healthy development for crypto. Like, the thing about the ETF is that it solves investors' challenges. They have simple things that they're trying to solve. That might be related to custody, that might be related to estate planning or taxes or other things like this. And the ETF is a solution for those investors. That's why it has been so successful. Self-custody, meaning holding crypto yourself, is a very important part about what the digital assets markets and blockchain technology is all about. So we don't want to discourage people from self-custody, but the ETFs are a great, simple solution for building crypto into your portfolios. They will continue to be very popular, and I think what you'll see next is this broadening beyond Bitcoin, beyond Ethereum to more assets, more features like staking, and these will be very popular with institutional allocators.
So for any investors that are watching or advisors with clients that, are exposed to crypto and are purchasing crypto ETFs, what are some of the top things, or what is the top thing that an investor really should keep in mind when it comes to their crypto exposure this year particularly?
Well, first thing is, a little goes a long way. These are risky investments, and they're intended to be a part of a diversified portfolio. So the right number is going to be different depending on different investors, but we typically say the academic answer is about 5% of your portfolio is a good amount for maximizing risk-adjusted returns, and that can be a little bit less, a little bit more, depending on your investor type. And these big drawdowns, I think, are a good reminder of why just a little bit is the important amounts. But get off zero. Maybe use big drawdowns as an entry point and keep this position about the right size. If you do that, you stick with it over the long run, you're going to benefit from rapid growth and technological development of blockchain technology, something that we believe deeply will transform traditional financial markets over the coming decades. So buy a modest amount, stick with it over the long run, you're going to have good portfolio outcomes, in my view.
All right, Zach Pandl, Head of Research for Grayscale Investments. Thank you so much for joining us today.
Thanks so much, Kristen.
And thank you so much for tuning in to the ETF Show.